How's everybody doing today? Welcome back to the channel. So today I'm going to be talking about why you should not be done with investing right now, and you should actually be buying stocks and investing into the stock market even though the market is basically all the way back up to nearly all-time highs, right? So right before we get into it, if you haven't already, make sure you get your 2 free stocks with Webull. I'll have a link down in the description. All you have to do is sign up, make an account, and then once you open up your brokerage and uh, deposit at least $100, you'll get a second free stock worth all the way up to $1,400. So make sure to do that if you haven't already. Now, as you guys can see, the Dow is up once again, even more today. It's barely up, but it is still up, which is like pretty crazy because basically a whole week it's been rallying up, almost 1K points up for the week, right? Um, so that's actually pretty crazy. We all thought that this dip would have continued, right? But nah, it's been going up steadily. Obviously, the Fed recently bought a ton of corporate bonds. As you guys can see, this is straight from the Federal Reserve website, right? So let's go to the 3-month chart, man. Look at this. They bought a crazy amount. If we look at the 1 year or all time, we have never seen such a rise ever. Not in 2009, 2008, not in the 2013 era. No, man. This is actually crazy. This is an insane jump from 3 million all the way up to 7. Obviously, this is in trillions, not millions, I believe. Or no, this is in millions. So, yeah, this is actually an insane jump right now. Um, the reason why I'm actually showing you guys this is obviously inflation, man. You do not If you have at any point of time more cash sitting around than you have invested in the overall markets or in stocks that you think are good, you are basically losing money. The only reason why you should actually have cash laying around is one, if you have about 20% of it, the 30% just as a buying opportunity, yeah. Or if you're actually saving up for a big purchase that you don't want to actually lose in the short term, let's say you're buying a car, a house, then yeah, definitely keep cash. Don't keep stocks, just so you can actually use that to buy a house or something. Or number three is if you're actually retiring soon and you don't want half your retirement to go away because you probably won't live through it to actually see it go back up, you know what I mean? But that is probably the three reasons why you shouldn't actually, or you should have most of it in cash. But I've seen a lot of people making the mistake right now. They have, like, let's say a lot of money invested into S&P, right, or the overall stock market, in like mutual funds, stuff like that, but they want to take it all out because they think it's going to crash. But the thing is, you don't want to actually be doing this, man, because in the short term, yeah, it may go back down to like what half of what the dip was, and you might lose 20% or 10%. It's not even going to be that much, maybe 15%, right? But in the next 5 years, because this is going to be like your investments for the next 10, 20 years, right? Because this is like all your money you have. You want to be invested at all times. You're playing the long game. In 5 years, let's say, look at the max. Let's say you pulled all your money in 2008. Okay, you lost 50% of your money. You thought it was going to go back down, but you never bought back in. Few years passed, you never bought back in. Now all of a sudden you missed 50% of gains. You missed 20% plus of gains from the all-time highs, or you missed 220% gain. So you don't really want to be playing this few years short-term game in the overall investment of the market. I'm not talking about like individual stocks here. I'm talking about the overall market. You want to be the time in the market. You want to be in the market longer than you do trade, right? You want to have the time in the market is more important than timing the market always. And we've seen this historically. In 2000s, if you sold everything because you thought it was going to dip more, yeah, you made a good move. You timed the market pretty good because it went down another 20%, but you never bought back in. So it kept going up 70%, 60%, and you lost it. And you lost those potential gains there. So at the end of the day, you don't really. I've seen a lot of people doing this recently, and that's pretty dangerous because you don't really want to be timing the market. You could potentially, like, yeah, what if it does go down, and you lost, and you actually made a good move? But what if you never buy back in? What if you just can't buy back in because it's really hard to time the market again, and it keeps going up, and it keeps going up? Then you're pretty screwed. Then you're potentially pretty bad. I'm personally buying some like index funds. Like, this is a real estate Vanguard real estate index fund, right? I've I've been buying this as well. This is a very good REIT. It's still down about 20-30%. They basically own a lot of real estate all around the United States, but they focus more on up and coming areas. They look at areas, like they're very particular on where they buy their real estate. They just don't throw money everywhere and buy them. So this is actually pretty solid stock. It's been at least 170 all the way up to 200 in the last 5 years. So it's actually down quite substantially from then. And I've just been buying some of this because this is like a long-term play for me. With a pretty decent dividend as well. Even if it doesn't recover for another year, I'll still make a decent dividend off that. And yeah, stuff like that, guys. So like even if so like what I would recommend right now, obviously if you're not investing consistently, you've pretty much lost. You should be investing consistently. Maybe, I don't know, buy a index fund every few months if you're actually investing that way. I know a lot of people just pick particular stocks instead of investing in ETFs, which is definitely a good thing. If you can actually successfully pick stocks to buy consistently, and do so, then that's pretty decent. I've done a few picks on myself. I've done pretty good on Facebook. I've picked Tesla stock, even Snapchat stock. I actually almost made 50-60% on, which I probably will sell, to be honest. And even Uber stock, I made like 20% on. So I've managed to pick pretty decent stocks. But the other half of my portfolio, I like to use, just put it into ETFs and just consistently grow that, because I know I can consistently grow that. So I would say like every month or so, just buy a few S&P 500 funds, maybe put a few $100 every week, every month, every few months, and do that consistently, and you'll be for sure make gains regardless of what the economic condition is right now, if you're investing long term and want to actually grow your money, because inflation is a big thing. What your money bought for you like 10 years ago, man, it's not going to be able to buy you anything right now. That's why like minimum wages in California, yeah, it was $9. Now it's $13. It's gonna be like $15. That's inflation, because wages have to go up because you can't buy as much stuff with your money. So with inflation, what goes up? Prices for goods and services, prices for stocks go up as well with inflation, because Apple is gonna have to charge more money for their iPhone, and they're gonna make more revenue because of that, and that's gonna like show in their stock price, and that's gonna bring everything back up. Like consistently over the next few years, because obviously you don't see the balance sheet going down, right? Yeah, in 2008 the balance sheet went from 3 million to 2.8, or it went from 4.5 million to 3.7 billion in their balance sheet. Now when I look at it, we were actually doing pretty good right here in 2009 before Corona. Like they were actually decreasing, but yeah, this completely, yeah, it went up. So I mean, regardless, even if Corona didn't happen, none of that, we would have just seen obviously inflation slowly go up as well over the next over just forever. Like you're never gonna see, like you're not gonna invest in $1 and think it's gonna be worth more. No, that's just not how it works. So hopefully you guys did enjoy this video. Hopefully you did learn something for this. I just wanted to let you guys know about this, because man, it's I've seen some people make mistakes of just like taking out all their life savings, life investments in the S&P or whatever in the markets. Man, that's not a good idea, I don't think. So hopefully you guys enjoyed this video. Thanks for watching. If you haven't already, make sure to subscribe to this channel. I'm trying to hit 1,000 subscribers by the end of this year, and I'll see you on my next video.